Kitco news coverage of the 32nd Global Metals, Mining and Critical Minerals is brought to you by First Majestic Silver.
I'm Michelle Makori, and this is Kitco News coming to you from the Bank of Montreal's Global Metals, Mining and Critical Minerals Conference, now in its 32nd year, taking place in Hollywood, Florida, where the creme de la creme of the industry have gathered, including the one and only Pierre Lassonde. Pierre, lovely to see you again.
Well, thank you for inviting me. Always a pleasure.
Okay, and of course, Pierre is the man who essentially created the mining royalty model, the co-founder of Franco-Nevada Corporation, the first publicly traded gold royalty company. And Pierre, you've also served as president of Newmont Mining and chairman of the World Gold Council. So very prestigious resume over there. And to add to that prestige, you have also recently been named an officer of the Order of Canada.
Yeah, I am blessed. What can I say?
Yeah, well, congratulations on that.
Thank
and that
you.
is, of course, recognizing your philanthropic work in the education, arts, and several other charities. And you're also currently the CEO of Firelight.
Yep.
Okay, so a lot to discuss. Safe to say that you are a veteran of the mining industry. As we chatted earlier, you've been in the sector for almost 5 decades now.
That is correct.
Although
yeah.
you certainly don't look it, but almost 5 decades now. And you're saying that for the first time in your lifetime, you're sensing a real paradigm shift in the sector.
I do.
Explain that. Yeah.
I do. I think that, for example, 2 weeks ago, I got a call from the finance minister of Ontario. Please come and visit. I've never had a call from the finance minister of any government. And why was he inviting me to talk about critical minerals? He wanted to know what Ontario could do with the means and what policies it should have to encourage mining. Well, what government has encouraged mining in Canada in 50 years? None, zero. So there is a real change of attitude and the perception, and it's real. We need the mining industry if we want a greener world. And when you talk about critical metal, the most critical of it all is copper, because copper carries electricity, and without electricity, we have no energy. We have carbon-based, but we do not have green energy. So the most critical of it all is copper. And then the governments are saying, what can we do? And so at the end of the day, it boils down to access and process, which is where they can intervene. And the industry, for the first time, has the ears of government in Canada, in the US, everywhere we work, we have the ears of the government. So we are in a privileged position.
What has typically been the government approach in your experience?
Oh, we don't like mining, period. And we're going to make it more and more difficult, and it's going to take you longer and longer. And, if you want to develop a mine today, it's like 10 years, 10 to 12 years. And where do you think we're going to get the copper to get a green world if, one, we can't find it, we don't get access to the land, and two, if it's going to take 10 to 15 years for processing, like the permitting and everything else, we're not going to get there.
So governments are finally realizing what seems pretty obvious, and that's it. If you want to move towards this greenification trend, if you want to move towards clean energy, you're going to need the critical metals, the critical minerals. And now for the first time, you're saying they're actually looking at some kind of cooperation with the leaders in the industry.
Yep, they're looking at how they can streamline their processes and how they can essentially give us better access to the land, because that's where it all starts.
All very well and good. And it's about time that governments realize that they need to cooperate with the industry because, as we've discussed, it's so vital to moving away from carbon. But the market doesn't seem to have acknowledged this yet. Certainly not if you look at how gold and silver and copper have been performing and how other commodity miners and all companies in the sector and in the industry have been performing. That has not been reflected in the market sentiment at all. Why do you think that is?
You're 100% right. When you look at the indices, like the gold indices, for example, it's been flat for 10 years. So, reflecting the total disinterest of generalists in particular for the industry. Why it's so? Several answers. One, I believe, is that particularly if you're an American, the Dow or the S&P, there is this conception that there is a Fed put, that every time that the economy is going to kind of like start to fall apart, that the Fed will just cut interest rate and everything will be good again. So that, I think, has been one of the main factor where why do you need to invest in gold? Because the dollar is strong. When the dollar is strong, you don't need gold, and you just ignore the entire sector. What's going to change, to my mind, is that I think that the S&P is overvalued by 30%. I think that in the next, 6 months, you're going to see the S&P and the Dow go down by 30%, and yet the gold equities are not going to do that because they carry dividend yield that are going to keep them there. Because at $18.50 gold and at $4 copper, the industry is doing quite well. Thank you very much.
Okay, so those are actually 2 points, and obviously I want to dive deeper into this correction or a crash, really, of a further 30% in the S&P. And that, you say, is linked more to the idea of the Fed and more to the idea of gold as an inflation hedge. But your previous point was that the industrial use of metals is finally being acknowledged and recognized by governments. And that has less to do with the Fed in terms of investors not responding to that. So when do you think investors, both institutional and retail, really start to catch on to this idea that, as you say, the governments have now started to acknowledge that in order to go green, you better support the mining sector?
I think when you're going to see copper like $7 a pound, because it's not coming out of the ground, all of a sudden the investor is going to say, well, where's the stuff going to come from? Well, first you got to find it, and then you got to permit it, and then you got to build it. It's not going to happen that fast. And the same thing's going to happen with gold. I mean, gold production has been flat now for 6 years. Even though the gold price has tremendous margin for the industry has not been able to increase production by 1 ounce over the last 6 years.
Why is that?
Well, because you can't find and you can't permit the deposit fast enough. So it's the same thing with the oil business, by the way. Oil production has actually been the same since 2010. For the last 13 years, there's not one more barrel of oil coming out of the ground. So then you're going to start to push on a string. You're going to need more energy. Where's that going to come from? It's going to be a higher price, and it's going to feed into more inflation. So I think we're going to see a second cycle of inflation coming in the next 2 to 3 years.
All right, well, let's touch on that, because that's also what you think takes the S&P down by another 30% from where it is now.
I think what's happening right now is that over the past 5 years, both Washington and the Fed have created extremely loose, monetary condition. So they've created a runaway freight train. Now the Fed is trying to put the brakes on the freight train, and they started slow, and now they're seeing that the end of the rail is coming, and then they're really like squeezing, and you're seeing the spark starts to fly under the train, like the picture of that, who can afford a 7% mortgage rate? Who can afford a car at 10 or 12% interest rate? So they are going to kill the real estate business, the car business. They are the 2 biggest businesses in the United States. So what do you think is going to happen to the U.S. economy?
So you're saying you believe that the Fed will continue to be aggressive in its fight against inflation at the cost of the U.S. economy. Pretty much the view that people have been saying, they're going to raise rates until they break something.
They're behind. They're like a year or 2 behind, and they're gonna stay behind too long. And at the end of the day, they're gonna because think of mortgages. 5-year mortgages, they roll one every 20% a year. So it's gonna take a year or 2 before it really starts to bite. Then it's gonna bite really badly.
So you don't think that the Fed is going to be able to tackle inflation, and you also don't think it's going to be able to engineer any kind of soft landing. So what is your forecast then? Break it down for me. What would be your economic outlook for the US then in terms of both inflation and in terms of recession? Are we headed for a stagflation? And if so, by when?
Yeah, I think you're going to see the U.S. economy enter into a recession in the next 2 quarters, and it's going to be a fairly significant recession. All the earnings are overstated. Not overstated. All the forecasts are overstating the earnings. They're going to come down, and with that, you're going to see the S&P come down by about 30%. Same with the Dow. The Fed will start to, turn it around. They will drop, but they're not going to drop fast enough. And in terms of the rest of the world, I think is going to do a little bit better. And so the dollar is going to come down, and gold is going to start to go up because of that.
Yeah, these are all positive indicators for gold.
Yep.
Then clearly. But yet we haven't seen that factor into the gold price yet. We saw a strong start to the year with gold rising from 1,846 at the beginning of January to a peak of almost 1950, falling to around 1817 today. You're seeing this, lots of people are seeing this. It seems pretty clear that the Fed isn't going to be able to take control of the situation. Are markets still optimistic here? Do you think that there's a disconnect between the price of gold now because people still have faith in the Fed?
Yes and no. I would have expected a lower gold price, to be honest with you, because gold doesn't like recessions. Okay, every time the US goes into a recession, the gold price, or the world actually goes into a recession, don't forget that half of the gold is bought, physical gold, it's bought by people for jewelry, for, and that market is your floor. And in a recession, that money disappears. And what saved gold in the last year? Central banks. Central banks came there and they put their hands out and they give it to me. And they took 1,200 ton, which is a third of all the mine production in the world. I mean, that is mind-boggling when you think about it.
Yeah, and that's certainly a point that I want to address, particularly with someone who was the former chairman of the World Gold Council. And as you mentioned, we had record central bank gold purchases in 2022. And yet, and before I get to why you think that is, and yet you say that you would expect the gold price to be lower.
Well, it is. It would be lower right now if it wasn't for the central banks.
And that's mostly because of recession concerns.
That's correct, yeah. But if it stays at these levels, coming out of the recession, I would expect 2,400, a lot higher.
So before we get to the central bank gold purchases and the trend we're seeing there, last year we chatted, literally a day or two after Russia invaded Ukraine. Of course, it was tremendous geopolitical tension and uncertainty. And you said that if this war extends, which you said it would, you did not think that this was going to be resolved quickly, we would see $200 oil and $2,400 gold. Firstly, I applaud anyone who comes out, gives me a timeline, gives me a price forecast. So I respect and appreciate that. And of course, there was so much uncertainty 2 days or so into Russia's invasion of Ukraine. But why do you think this hasn't happened? I mean, it would make sense that it would, given what was happening at the time. Why do you think we haven't seen $200 oil and $2,400 gold? At
the time, I thought that the US dollar had peaked vis-a-vis the rest of the world's currency. It did not. It went straight back. It went straight up until November. And a strong dollar is an anti-gold dollar. Okay, so at the end of the day, the dollar trumped gold, big time. That is the biggest answer, I guess, or the only answer that I can give you. I missed out on the dollar. Didn't think it was going to go that high.
Still people perceiving the dollar as a safe haven, as the case was.
Yeah.
But that trend may be changing, especially if we look at some of the indicators, one of them being central banks' record purchases of gold in 2022. Collectively, they purchased almost 1,200 metric tons of gold worth more than $70 billion. What do you make of that?
Well, I think it's pretty simple. The U.S. has been weaponizing the U.S. dollar for the past 10 years. And there is a side of the world that is saying enough is enough. Like, we don't want to get caught, or we don't want to get ruled by the US on a worldwide basis. So particularly China, but Russia and some India, some of the other countries are in the process of creating a dual system of payment, of currency, to counteract the US dollar. And so these central banks are buying gold as a reserve currency. Will they use gold to back a new currency? We don't know, possibly, or a basket of currency. We don't know. Will they use a crypto kind of currency backed by the Chinese government? We don't know. What I do believe, though, is that at the end of the day, you will end up with a dual world in terms of system of payment and the currency you pay. And that's not good for the dollar. That is not good for the dollar.
It's definitely not good for the dollar, arguably not even good for the world, but that's a whole matter of perspective and perception. But this idea of a bifurcation of the global monetary system, several guests on the show have said that. One of the earliest to call it was Frank Justra, saying that he foresees a bifurcation of the global monetary system. And we're seeing moves accelerating in that direction with the BRICS, Brazil, Russia, India, China, and South Africa, looking at forming their own reserve assets, as you quite rightly pointed out, potentially backed by commodities. They're having a big meeting in South Africa in August to finalize the details. Do you really think that they'll be able to get their act together, to come together, all these countries that have conflicts and challenges between them?
Yes.
You do?
I think they will. I think they will make it work. The US has pushed just too much, okay? Like, they want to be the big brother for everybody. Well, some of them are saying, like, goodbye. I don't need that. And I don't want my asset to be caught up by the US regulations. I don't want to be accountable to the US Treasury. We're a sovereign country. And if I buy a barrel of oil from you, I don't want to have to pay it in US dollars. I want to pay it in gold. I want to pay it in yuan or any other kind of currency. And I don't want to go through your SWIFT system because I don't want to get caught in your regulations. So will this happen? 100%. How? Still don't know. But I think in the next 5 years, you will see a dual system of payment and currency.
Within the next 5 years?
Yes.
So what would that mean for the dollar then?
I think that, what's precipitating the 5 years is essentially the Russia-Ukraine war. And because Russia can't sell anything, but can sell oil or gas, and it was all US based, and it's all caught in the SWIFT payment, and the Chinese and the Indian, they love the Russian oil. So how are they going to pay for it? So this is what's precipitating the movement. What's going to happen to the dollar? It's going to go down. How much? Don't know. But to my mind, over the next 5 years, you will see $2,300, $2,400 gold because of that.
Because of a weaker dollar and because of the fact that central banks have been buying gold, and you do think that these countries will in some way or another have gold involved in this?
Yeah, they will diversify essentially their reserve. Okay, instead of having US dollars, they will own gold. And that's what they're doing right now.
Pierre, it's been very good for the United States of America to be the global reserve currency.
Yep.
A fiat currency.
Yep.
Backed by the full faith of the American government and not backed by anything else, and to be able to be printing money as and when it wants, as we saw unprecedented fiscal and monetary stimulus after COVID. That privilege is not something that the US is going to want to give up without a fight. What kind of response do you expect? How do you see it playing out? I mean, if you're America, regardless of the administration, and arguably some administrations have been weaker than others, but regardless of the administration, you're still not going to want to give up your status as the top global reserve currency. So what kind of response would you get from the US?
The faith of all reserve currency is to go down. Simply because of balance of payment. When you can write unlimited check, what do you think happens? Why do you think the US is now $30 trillion in debt? Because they can keep writing checks.
Sure.
Okay? Well, at some point, like, why in 1971 did Nixon have to,
Take us off the gold standard.
kick the gold standard out?
Yeah.
Well, because all of a sudden France said, your exorbitant privilege of reserve currency, we want the gold. And they said, well, if they start to do that, Fort Knox will be emptied within 6 months. So they stopped so the same thing here, like essentially they say, we don't want the dollar anymore, you keep it at your own.
And the US is going to relinquish that without any kind of fight?
There's nothing they can do.
Military action?
Well, will there be more wars? That's a whole different question. Not really. I think it would be, if we see more war, it would be related to energy. It will not be related to the US dollar, per se.
And what happens? Does the Western world continue to use the dollar in this scenario? When we say a split, how do you see the split happening?
Well, the split will be East-West. It's that simple. I mean, like all the countries that are democratic, the West will be still using the dollar because there's really no alternative. And the East, either they will create a new currency or they will use a basket between the yuan, maybe the rupee, or maybe gold and a basket of commodities. Don't know yet.
Right. But you do seem to have pretty strong sense of conviction that this will happen, and this will happen within the next 5 years.
Yep, I totally.
You're not alone, Pierre. You're not alone. As I said, many people on the show have come onto Kitco News and have said that they do see potentially a central bank digital currency representing all of the fiat currencies of this new alliance. But because there isn't much trust in the other country's fiat currency, they will back it to commodities, gold playing a role there. Do you see silver perhaps being in this basket of commodities?
Silver has always been the poor man's gold, and I don't see it. It takes so much space in storage.
Yeah.
That I don't see silver becoming money. There's enough gold to be able to do what needs to be done. So at this point, I don't see. But silver will always be a monetary asset. I mean, silver is primarily a industrial mineral.
Right.
I mean, that's what it's used for, and I think it's going to continue to be. But, once in every 20 years, can it become a monetary asset? Yes.
So, Pierre, if in 5 years' time, half the world says we don't want dollars anymore, what does...
No. Well, it's not that they're not going to use dollar. They may still use dollar to do business with the U.S. or, China will still use the dollar, to trade with the U.S. and they will still use dollars to trade with Europe or euro, and they will still SWIFT. But to trade between themselves, they will not use the dollar. So
right.
Let's be, the majority of trades will still be in dollars, but there will be a significant portion that will not be dollar-based.
What would that mean for the U.S. economy?
Well, in terms of the U.S. economy, I don't think it's going to mean much of anything. You're still going to have the trade and everything else. But in terms of the U.S. dollar, it will mean a lower dollar vis-a-vis a basket of currency, a much lower dollar. You're going to see dollar being repatriated. It means inflation.
Yeah.
That's what it means. And there's nothing the Fed can do about it. They can raise interest rate. There's nothing you can do about it.
We've had guests on the show that say we will have hyperinflation when all of these dollars come flooding back into the United States.
I don't see that.
You don't see that as a problem?
No, I don't see that.
But you do see inflation, you said earlier in this conversation, at a sticky 10% for at least the next, you said in 2023, you still think it'll go up to about 10% and be at that way until 2024? Or?
Yeah, I think that, if you look at the period 24 to 25, 26, you're going to see inflation going back up. Now, is it going to go back up to 10%, 8%? There's a good chance of that, because of the flood of dollars coming back into the US. But we don't know if those money, how they're going to come back. That's still a big unknown.
Okay, so what does an investor do in this situation?
Well, I think that if personally, I want to be invested in gold, okay, and silver and commodities. I mean, oil and gas at 100%. I think that they're all undervalued at this point in time. And I want to be invested in gold and copper in particular, because copper is the critical metal of the future. Without copper, there's no electricity. Without electricity, we have no transportation, we have no communication. Think about it. It's like we don't have the lifestyle we have without copper.
So you're still more bullish in terms of appreciation on copper than you are on gold within the next 5 years?
Well, copper is a critical metal. Okay, gold is a monetary metal.
Right, but in terms of seeing a percentage increase, you think that copper is going to outperform gold within the next 5 years?
More than likely, yes. Over the next 5 years, yes.
So give me a copper price estimate for 5 years' time.
Oh, I think you could see $7.
For copper?
Yeah.
I mean, it's $4 per pound now,
Yeah.
So doubling, essentially.
Almost.
Yeah. Almost doubling within.
You got to be careful, because once you reach over $7, you're going to start to see some substitution.
Okay.
Okay, so I think between 5 and 7. But the difficulty with copper right now is the production is pretty well maxed out, and the industry is not putting enough money back into developing new projects. Not because they don't want to, but again, it's access and process. Is that new discoveries are far and few between, and then it takes 10 years to permit and build. It takes a long time.
And as we've discussed, governments are starting to realize this, but probably not soon enough.
Not soon enough.
And where do you see gold then in 5 years' time? If this new commodity-backed currency has been launched, what does that mean for gold?
Easily $2,300 to $2,400, if not much higher. I really am bullish on gold. Longer term, like 5 years out, I'm really bullish.
So 5 years at $2,400, that doesn't seem that much of an appreciation.
No, but invite me next year and I might have bigger numbers.
You may be even more bullish, more optimistic next year. All right, well, let's talk about the best exposure to gold then. You're an investor, you're watching Kitco News, you're listening to Pierre Lassonde. What is the best way for an investor to get exposure to gold?
Well, I can tell you what I'm doing in my portfolio, and then I never tell people what to buy. I tell them what I'm doing, and then you can do whatever you want. I mean, as a generalist, for example, if you want exposure to gold, the first place to go is Franco-Nevada. Okay, Franco-Nevada is like a $26 billion company. With 1.23 billion of revenue, 36 employees, all the revenue minus whatever goes right down to the bottom line. You get exposure to hundreds of royalties, 10 million acres in the best gold trend of the world, and the best management team around. So, and you get full exposure to the gold price. Gold price goes up 5%, you get 5% increase in revenue. It goes right down to the bottom line. That is the best way. Then you go to the large companies, the Newmont, the Agnico Eagle. Those, to my mind, would be the two best out there. And then what I like to do is the companies that I'm sort of shepherding, as Orla is one. It's ORLA, Orla. And it's a producer it's a company we started 5 years ago, now producing 100,000 ounces. We'll be developing a new mine in Nevada in a year's time. Production is going to go up. Great cash flow, fabulous management. Foran in Canada, Saskatchewan, new discovery, not in production yet, but has all the permits, almost all the permits, has all the money to build, and will be the first carbon-free copper zinc mine in the world. Okay, so carbon neutral, which is outstanding. Has a brand new discovery which will double the size of the reserve, and at very high grade copper, 3.4% copper. It's incredible. So that's a really interesting proposition. And then Prime Mining, it's a gold exploration company in Mexico. And then the latest one is ATEX, ATEX. It's copper exploration in Chile. We have drill holes that are over 1.2 kilometer thick in porphyry copper with up to 1% copper over 500 meters. I mean, incredibly exciting.
And these are projects that you're invested in
Yep.
via Firelight,
Yep.
which is your family office.
Yeah, it's my family office, that's correct. Yeah.
No, okay. Now, you mentioned Franco-Nevada. Obviously, talking your book, Frank.
Of course.
Here, as one would expect, talking your book there. But the stock hasn't done so well. I mean, it's down, what, I think 13%. Why is that?
Yeah, unfortunately, the government of Panama, so Franco-Nevada, one of its major royalty is over Cobre Panama, the sixth largest copper mine in the world, copper gold mine in the world. And they have been renegotiating the contract with the company, with the state. And let's say that the both side have had their elbows a little bit up and, sharp. And to the point where the company announced a couple of days ago that they were shutting down operations. And so my understanding is that all of the monetary issues have been resolved. It's a question of the duration of the length of the contract to be put in place. The company wants to have at least a 20-year contract. If you talk about a stability agreement, it should be more than like a few years. And the government has been reluctant to do that, and that's where but at the end of the day, it will get resolved, for sure. But in the meantime, Franco-Nevada, which, huge, not a huge, but a good portion of its royalty revenue is from Cobre Panama. So that's why the stock has been...
Okay, so there's a bit of governmental regulatory gridlock until they figure out their agreements.
Yep.
In this environment, Pierre, help our viewers understand why a royalty company would make good sense with regards to inflation.
Well, the great thing with royalty is that it has no costs. So, like a net smelter return, and NSR, as we call them, is a direct percentage of the gold that you produce, for example. So if you produce 100,000 ounces and you got a 4%, essentially you get 400 ounces to your account. If the gold price goes up 5%, well, your revenue goes up 5%, there's no cost to it. And that's why it's inflation proof. It's actually the best way to own gold, to my mind. And there's no cost of exploration, and there's no capex, and there's no OPEX.
Well, hence you are the father of royalty companies, Pierre.
It's the best business model in the world, period.
We discussed Newmont. You touched on it briefly. Newmont, we're looking to purchase Newcrest for, I believe, $17 billion. Does that look as a trend that you see going forward in the industry?
Well, we've seen it with Agnico Eagle, doing the consolidation. We're seeing it now with Newmont. It's a trend that will continue because, to be able to talk to generalists, you cannot have companies that are 500 million or $1 billion. You need to have companies that are like the BHP, the Rio Tinto, the Glencore, like at a certain size. And so what Newmont, I think, is trying to do is get to a size and a diversification of asset, copper, gold, countries, Australia, the US, South America, that gives them the benefit of size and jurisdiction. And so I think what they're doing is a very smart move. And I hope that at the end of the day, they're successful.
So you do see more consolidation in the
Yes,
industry
no question.
at large.
Yeah.
Do you have any targets that you would think looking into the industry would make sense?
Well, there are companies to my mind that are, have been very successful, like Endeavor Mining, I think, there's a number of companies that have been very successful in consolidating part of the mining industry. You're going to see more of that. And there are companies, I think, that are sort of like begging to, I wouldn't say begging, but that are, potential targets that are quite evident. I mean, I think, for example, Kinross, for example, it's got a really good suite of asset, and the stock is perennially undervalued, and so it's one of them. There are several others, and some you can see why. Like one mine, one jurisdiction company always trade at a discount, and management sometimes thinks that, well, I'm going to do this. I'm going to, I'm undervalued. I'm not going to do something. Well, they don't have the currency to do anything, and at the end of the day, the only thing they can do is really merge or get acquired. So yes, I think you will see that trend continue, and the fact also that the discovery rate has been coming down for 20 years, and so the best place to mine, copper or gold, oftentimes is on Wall Street or Bay Street.
That's where you can make it the best returns.
That's right.
You're saying.
That's right.
Well, Pierre, before we started rolling, we were chatting, and you said to me that 2022 was a bit of a rough year, but going into 2023 looking to have fun. So tell us a little bit more about that as we wrap up.
Well, I think, look, as I said, I look at 2023 as a turning point in terms of the gold industry in particular. I think that the dollar peaked in November. We're seeing a bit of a return now, but the European economy is doing a lot better than anybody imagined. India is on a tear. I think that Modi has made it a point that he wants India to be $15,000 GDP per person within 5 years, and he's electrifying all the villages. He's giving people energy. I mean, that's how you get richer, is by having energy. And so the East is doing a lot better. And I think I see commodity prices firming up, and I see gold doing a lot better in 2023. So I think it's going to be a good year, a fun year.
All right. And what is Pierre doing for fun in 2023 on a personal level?
On a personal level, so 18 months ago, I switched aside as a golfer. I golfed for 40 years as a lefty. Now I'm a righty.
Oh, okay.
Okay, and
That's a self-challenge.
It is. At my age, it's quite a challenge, and my goal is to be I have a better handicap as a righty than I ever had as a lefty.
And you're left-handed when it comes to writing, I'm assuming. It's your dominant hand?
No, I'm right-handed, but I play all sports left-handed.
Oh, ambidextrous then.
A little bit of that, yeah.
Okay,
yeah.
Well, we kind of have that in common, actually.
So there you go.
Okay, well, good luck with that challenge.
Thank you.
Let's hope for a good year in 2023 on a personal and industry level. Pierre, always a pleasure. Thank you so much.
Thank you for having me.
Kitco News coverage of the 32nd Global Metals, Mining and Critical Minerals is brought to you by First Majestic Silver.